Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that pullback on the Bitcoin chart. Guys, as you can see, Bitcoin is just retesting its lows here. We do have a series of higher lows. This is a higher low here off of our equal highs. Now, we are going to want to be aware that as we are drooping in this formation, there is the possibility that if we do take out that neckline underneath us, that could be the dreaded double top, especially if we get the breakdown and then come back up and do a retest underneath. So let's just say $93,000. That would prove that bears were in control and they could significantly pull this back, maybe to the mid 80s to even the mid 70s. Now, we're not there yet. We haven't broken the floor. And in fact, this still is potentially a higher low that could thrust us further upward. However, we do have a little bit of work to do. Just like it took time to build out this bottom, you can see a little W right here and then a greater W that actually took us up. We did put in just a little baby W, and now we may have to finish the other half of that bottoming formation before this squeeze ends up going forward. And then I would suggest that should we be able to flip that $98,000 area, then bulls will once again have the lead. Potentially, we're going to come up here and test that bull zone somewhere around the $100,000 mark, where we do have a high likelihood of getting rejected due to this resistance. You can see a nice rejection right here. Rejected, 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 right? And so this may be just a tough nut to crack. We'll be looking for yet another higher low coming off of whatever rejection we do have there. And this is a little bit of a dangerous moment because this would be a lower high as well, potentially, if we do end up dropping lower than our current lows. That could put us in some dicey territory, but we can deal with that when we get there. Simply, if we do have bullish divergence and this thing just manages to wick back up above our neutral point, then there's a good likelihood that this formation is just bullish consolidation towards the upside. I'm going to give you just some visuals to help you see what I'm looking at right here. And here you can see that we do have a downtrend that we could break out of. Of course, if we do break out of that downtrend, well, that's just a pattern busting. We can sometimes do something very strange where we just meander outside of that pattern before doing anything. But this is a bullish break if we do get it. And so we would be looking for that greater W that then if we break the neckline of that thing, that we could potentially see those prices at 108, maybe even higher, perhaps get that push up to that 120 that I've been looking for. Guys, we're not there yet. We didn't break out, and as long as we are under 98,000, the bottom here of our range, somewhere around that 93,000 mark, is still a potentially good opportunity. And we do have that wiggle room down to our bumper zone around 87,000, where if we do just wick back up, there's the potential to extend this bullish divergence, just like we had this bullish divergence right here that gave us that nice pop to 100K. We could form a greater bullish divergence, which then processes that breakout. But again, this is the make it or break it zone. And so we are looking for support in this area. Now, one thing that could happen if we are just experiencing a time-based capitulation is that we do just some funny shenanigans, break out, come back down, and we just waste time until we basically run into my golden parabola here. Now, guys, if you haven't seen my golden parabola before, you can go ahead and just zoom out. This is basically the parabolic price action that we've been having ever since the bottom of the market at 15.5K. Every time we've bounced off of my golden parabola, it's been a fairly macro bullish price action there. And so if we're just killing time as we go into that, maybe into late spring, right, this could bode well for BTC. As long as we don't lose this area, then time is on our side, because historically that has just been the consolidation phase that then goes into massive expansion to the upside. And what else do we have going in our favor? If we are able to just break out now or just kill time going sideways, then you can see that on a just a linear basis, right? We have flipped the top of the previous market on a trend basis, okay? Obviously, we flipped the top in this last consolidation where we did bust on through our prior resistance, but we never really tested it as any type of significant support. And so if the market is going to continue to be parabolic, right, with this golden parabola of mine, then what we would want to see is us to hold that trend flip, and that might satisfy the bulls sufficiently that we don't actually have to drop back down to that 75 to do a retest of this breakout, right? They can just qualify this as kind of a parabolic trend retest that then goes into a spring-loaded breakout, perhaps to my critical zone in the 120s. Now, if that doesn't convince you enough to just be cautiously optimistic in this area, then I also want to throw out there the pi cycle, which historically has given us fairly decent support at the bottom of the pi cycle and does throw us towards the top of the pi cycle. So here you can see that, yes, we meander along the bottom of the pi cycle, but as long as we don't lose it too significantly, we don't tend to hang out underneath there for too long, right? And as long as we're on top of it, we do have a chance to throw all the way up into the top of the pi cycle. And currently, if we do just zoom in on there, I'll just get rid of those markings. You can see that we are hanging on top of it, right? So this is the best case situation, is that we get that breakout sooner than later, right? We conquer that bull zone, start taking out these highs, and maybe we get that up thrust even as high as 150,000, where we will start running into some natural limitations. Now, we don't always make it to the other side. You can see in the past, sometimes we just throw up to the middle of this pi cycle range. And so that's why I think that this 120 is still a good area to be eyeballing. But yes, we do have the potential for significantly higher prices as long as we hold onto that pi cycle bottom line. Now, what happens if we do slip under the pi cycle bottom line? Well, again, like when we get into those zones, we can have some scary drops, but price action does tend to meander around it and then eventually reconquer it. So, it's going to be a different kind of measure underneath the pi cycle versus above the pi cycle. And that's why I would strongly prefer us to just hold that line. Now, even if we lose it, again, it's not over. It's just we have to go into different types of standards that we're going to be looking for. And I did mention that I would update you if we did see some potential weakness. And as you can see, things are coming to a head right now. And this is the squeeze. You can see this price action squeezing between the 21 EMA and the pi cycle bottom line, where this thing could either just pop to the upside or it could pop to the downside, right? And also there's that chance of just a meandering. So that doesn't give you a really clear answer. And in fact, if we just take a look at this range, here's the top, here's the bottom, and the price action's basically really in between. So this is an indecision wedge, right? The market is undecided. And so the news in the coming days about the liquidity on the Treasury side, right, on the Federal Reserve side, and then I think very importantly on the congressional side, how the House handles those spending bills and whether or not the government is going to be funded here in the United States. That's an important question. And the market always tends to have these little hangups right before that question. So we're going to be looking for good news on those topics to take us to the upside. And any indication that liquidity might be drying up, or that there's shutdowns of the congressional spending, or if the Fed just makes like a really big negative move, or if inflation suddenly spikes like crazy, the Treasury is coming to the end of its ability to spend. They probably have months, maybe they could squeak out some liquidity for the rest of the year, but they can't really do it by themselves. They need Congress and the Fed to be going along with them. So even, presidential action alone just cannot keep this market moving. All three of those major liquidity parts have to be moving together in order to shift this momentum, and the market is looking for that. All right, guys, I think that's going to wrap it up for BTC, and that's your alpha for the day. Stay safe and happy trading.